Good afternoon. Thank you all for joining us today. This is Michelle Savage with XBRL US, and you are here for the session on XBRL reporting for special purpose acquisition companies. I'm going to take you through our agenda and first address who our speakers are going to be with us today. And actually, let me put my camera on here. Okay. So we're happy to have with us today Will Allen. Will is Chief Operating Officer at RDG Filings. We also have Nikki Berteau. Nikki is Sales Engineer of Disclosure Solutions at Broadridge Financial Solutions. And we have Angela McTeer, Business Requirements Analyst at Donnelly Financial Solutions. So welcome everyone, and thank you very much for joining us. The program today, we're going to focus first on the SPAC rule. We'll then go through an introduction to XBRL. We'll then talk about workflow and tagging and provide you some demonstrations there, get into samples and tips, and finally Q&A. So as we go through the presentation today, if you have any kind of difficulties with technology, please send us an email at info@xbrl.us. That's info@xbrl.us. And if you have questions, please post the questions directly in the Q&A link on your Zoom console, and we'll take questions as we receive them coming in. So with that, I'm going to turn it over to Angela, who is going to talk to us a little bit about the rule itself. Angela, thank you.
All right, Michelle, thank you. Okay, so next slide, please. Thank you. All right, so we want to give a general overview of the SEC's rule. So in 2024, the SEC adopted final rules and regulations for special purpose acquisition companies, better known as SPACs. So the SPACs, IPO, and de-SPAC transactions, they offer an alternative pathway for private companies to basically enter the public markets. So the transactions that are often viewed as having several potential advantages over traditional IPOs. And in prior years, and following these SPACs, regulators and industry observers actually expressed concerns regarding some irregularities between investor protections for the traditional IPO and the SPAC transactions. So the SEC also found that some of these transactions presented complex structures. That resulted in the formal adoption of the amendments. Therefore, the rules were designed to align SPAC transactions with the traditional IPO standards. So basically focusing on enhanced disclosures, investor protection, and liability. Next slide, please. All right, so to assist with aligning SPAC and de-SPAC transactions with the standards of traditional IPOs, the SEC established specific prospectus disclosures under a new item 1600 of Regulation SK. Regulation SK item 1600 actually introduces 9 new items. Those will definitely be discussed in further detail later in this webinar. But the items offer enhanced or provide enhanced disclosures regarding detailed disclosures on sponsor compensation, conflicts of interest involving the sponsors, directors, officers, and advisors, potential dilution, including impacts from redemptions, warrants, pipes, and sponsor economics. Detailed information about the target company. So in creating these enhanced disclosures, the SEC definitely focused on target companies providing enhanced disclosures, pretty much aligning them with the SPAC company itself. That information or that enhanced information is required in the de-SPAC transactions. Also, in the de-SPAC transactions with the target company, they are now required to be listed as a co-registrant. So they will carry similar or common responsibilities as the SPAC company. The disclosures are also required to be tagged in inline XBRL. Okay, next slide. All right, so some of the forms that are required in the SPAC transaction, in the SPAC transaction IPO. So Form S1 or F1 for our foreign private issuers, Form S1 and F1 amendments. So the SPAC companies definitely in these IPO offerings must be prepared to respond to SEC comments. So you may have to file multiple amendments. A Form 8K files within 4 business days of the IPO closing, and that is to report the completion of the IPO. Issuers will also be required to file ongoing 8Ks, and that is to report any material events, current events that are happening within the company or referring to the transactions. Quarterly and annual reports on Forms 10Q and 10K will be required. So after the IPO is filed, the SPAC company is deemed a public reporting company. And so in being deemed a public reporting company, they must comply with those quarterly and annual reports. So these are required until the SPAC actually liquidates or completes its business combination. Next slide. Thank you. All right, de-SPAC transactions. These are the business combination where the SPAC has actually confirmed a target company that they're going to take public. So that transaction is required on Forms S4 and or F4. It may also be on an S1 and F1 if they're doing a resale registration statement. Proxies could be required for a vote on the merger. That's going to be on your forms Def 14A or Def 14C. Those are the schedules 14A or C. And then possibly a tender offer. So the tender offer is triggered when a SPAC allows the shareholder to redeem shares during the merger or during an extension vote. Okay. So SPACs do not file a Schedule 14A or C, such as a foreign private issuer in connection with the de-SPAC or extension would need to comply with item 1608 of the new rule. Again, that's going to be discussed in detail further in the webinar. And Exhibit 98. So if the issuer is filing any report, maybe an opinion or an appraisal that's required under item 1607, they could file that exhibit with an S1, F1, S4, F4. You can file it with a Schedule TO or proxy. It cannot file with an 8K. Okay. Once the de-SPAC is confirmed, the issuers will file a Super 8K. So when filing the Super 8K, the Super 8K would include a lot of detailed information, probably the same information that would be required in possibly a Form 10 registration statement. So the Super 8K could include several documents. Once the Super 8K is filed, and it is filed within 4 days of completion of the SPAC, after the Super 8K is filed, then the tagging requirements for those enhanced prospectus items, they go away. Okay. And so with that, I am going to turn it over to Nikki. Thank you.
Thank you very much, Angela. And good afternoon, everyone. So today I am going to give a brief introduction to XBRL, just discuss what it is, why it matters, and how it's used in practice, especially in SEC reporting. And my goal is to keep this simple and practical. If you're new to XBRL, think of this as a foundation for understanding how structured data makes regulatory reporting more useful and machine readable. Okay, so to understand XBRL, it helps to start with the problem it was created to solve. So historically, disclosures were primarily paper-based. That made them quite difficult to search or analyze and heavily dependent on a manual review. So then in the 90s, reporting started to move into the electronic format, like text files, PDFs, HTMLs. That was definitely an improvement where documents became easier to store and search, but the actual content itself still wasn't reliably machine readable or identifiable. So, in other words, a person could read the information, but software couldn't consistently understand what each number or disclosure actually meant. So, the need became clear. We needed a flexible, standardized way to identify data consistently, and that's where XBRL comes in. So what is iXBRL? So iXBRL stands for Inline Extensible Business Reporting Language. I know that's a mouthful, but good to know what that acronym stands for. So at a high level, it's a standardized way to tag and categorize reported data. It's more than just a file format, though. XBRL creates a self-described data model. That means that the data carries information about what it is, how it should be interpreted, and how it can be validated. We provided a few key terms here that should be quite helpful. The first is a tag or element. This is the machine readable definition associated with a reported fact. Then we have a taxonomy. This is the dictionary, we'll call it, of reporting concepts. And you have an instance document. And this is the structured filing itself, like, for example, the actual S1 filing. This would be the structured filing itself. Then you have link bases. So link bases provide supporting relationships between labels and the presentation and definitions and calculations. We won't get into too much of those details, but just so you understand why those link bases are there when you submit a filing. And I'm going to show you a visual of that a little bit later. And then inline XBRL, that embeds those tags directly into a human readable HTML document or the XHTML. So that last point is especially important because with iXBRL, you don't need one version for people and another version for machines. With iXBRL, you have one single document that works for both. Okay, next slide. All right, so let's talk about structured data. So structured data combines two things. One is a well-defined taxonomy, and two is the well-formed data. So you can think of the taxonomy as the framework or the map, and the reported data as the content placed into that framework. So once information is structured this way, it becomes much more useful. It can be searched, compared, analyzed, and reused much more efficiently than just not just by regulators, but also by analysts, investors, researchers, other stakeholders. Okay. So XBRL isn't just about filing compliance, although that's obviously very important. It also supports better transparency and better downstream use of that information being disclosed. Okay, next slide, please. Okay, a critical part of XBRL preparation is the selecting of the appropriate element or tag for each disclosure. There is an order of precedence that helps guide this process. This is outlined in section 6.5.1 of the XBRL guide, the SEC's XBRL guide. This is a very important resource tool for you. And I'm sure Will is going to be discussing or highlighting certain aspects of this as he discusses his, shares his tagging workflow and demonstration with you. And Angela is also going to share with you links to those resources as well. So the order of selection, selecting the appropriate element, is first the references, codification references, for example, or authoritative references. The period type. So is it a balance sheet item, instant, or is it an income statement item, which is duration? Then you have the data type. This can be like a monetary element, or is it a percentage? Is it shares or per share? So the data type. And then you have document string or definition. Notice how this one is fourth on the list, right? So you're going through references first and then period type and data type. These technical and conceptual components are really critical before you even get to looking at a definition of the element, because technically the element being chosen or selected must fit. All right. So next is definition, and then you have the standard label. All right. The main idea is that the selected element should match the nature of the reported fact as closely as possible. All right. Next slide, please. Thank you. Okay, so this slide shows what that would look like ultimately in practice. So this is an example of a tagged fact. You have a single reported number like this 20,000 you see here highlighted. And this is not just a number in XBRL, right? It's tagged with all of this additional context that explains exactly what it represents. So that includes things like the numeric unit, which you see is USD, the time period, which we see is February 23rd, 2026. The label is shown here. This is what's presented to the reader. You have the accounting concept, the authoritative reference, which is regulation SK in this case, and then you have the scale attribute, which here is a scale of 0. So there's no truncation, 0 scale. So when software reads this fact, it's not just guessing, it knows what the value is, what it refers to, and how to interpret it. And that context is really what makes structured reporting so powerful. Next slide, please. Okay, so where is XBRL used? XBRL is widely used across the SEC on other forms of structured disclosure. In the US, it's employed by organizations like the FDIC, the FERC, NGOs, and also within the private industry. And then also internationally, many countries have also implemented XBRL-based reporting. So this is not a niche reporting concept. It's a broadly adopted framework for making disclosed information more accessible and usable. Next slide, please. So for SEC filings, the taxonomy that applies depends on both the type of registrant and the form being filed, okay? So for SEC, it's important to understand for some taxonomies, they're going to include multiple entry points. That's very important for the SPAC to understand on the SPAC taxonomy, because there are multiple entry points on the SPAC. These entry points are essentially different starting paths depending on the reporting structure or the filing context. So for the SPAC filings, for example, the relevant entry point is labeled SPAC, right? And there are different entry points within that taxonomy. So the important takeaway here is that preparers need to start with the correct taxonomy and the correct entry point, because that's what determines the set of elements and structures that will be available to you in that filing. Next slide, please. So this slide highlights that taxonomy structure I was just speaking of, and this can vary, and how entry points are organized can vary. So this is an excerpt from the SPAC taxonomy guide, which is published by the SEC. And in practice, this means the taxonomy is designed to support specific reporting scenarios. So you have the SPAC reg, SPAC DSPAC, SPAC com, and SPAC projections. So the SPAC related reporting, for SPAC-related reporting, the available roles and entry points are tailored to each use case. From a preparer standpoint, this helps create consistency because the taxonomy guides how the information should be presented and tagged. Next slide. So some taxonomies, it's important to note, some taxonomies you will have the ability to, or it will allow you to create extensions, and some taxonomies will not. So extensions give filers flexibility where standard elements may not fully capture a particular disclosure. However, in the SPAC reporting, the taxonomy is relatively closed. That means the ability to create custom concepts is limited. And generally, the allowed flexibility is around defining dimensional data. For example, identifying information related to a sponsor or an affiliate or promoter of that SPAC. So these would be custom members. These are dimensional members, not custom elements, or that those elements would, custom elements would not be permitted in the SPAC taxonomy. So in this environment, the emphasis is more strongly on using the standard taxonomy element correctly rather than creating new elements. Next slide, please. Okay, so finally, this slide shows the core components of that XBRL filing set. First, you have the instance document. This is historically, by the way, the main filing document was the HTML, just the HTML. With inline XBRL, this actually becomes the XHTML, which is embedded with your XBRL tags. Then there's the schema. This defines the taxonomy and connects it to the relevant standard taxonomies. And then you have the link bases I was mentioning earlier. These provide supporting structure for the labels, presentations, definitions, and calculations if there are any. So together, all of these components form the reporting package that will allow the filing to be both human readable and machine consumable. So in closing, just want to reiterate that XBRL is a structured reporting standard that helps transform that disclosure from just a static text into data that can be understood and validated and analyzed. And the iXBRL builds on that by embedding those data tags directly into the readable filing document, and really just creating a practical bridge between the traditional reporting and now the modern data usage. So with that, thank you very much, and I will turn it over to you, Will.
All right, thank you, Nikki. And thanks, Angela. So thanks, or as Nikki explained, the XBRL tagging in SEC filings is a process of labeling business data and standardized tags so that data becomes machine readable and searchable across the Edgar system. So for SPAC filings, the SEC created that specialized taxonomy that Nikki mentioned. It's designed for SPAC disclosures because SPACs have a pretty unique set of structural features and risks that traditional companies just don't have. Rather than trying to force the SPAC disclosures into traditional US GAAP taxonomy, the SEC developed the SPAC taxonomy, and it's a dedicated taxonomy with the 4 entry points that Nikki mentioned and pointed out there. And you can think of those entry points as a starting template for different filing types. An S1 for a registered offering uses the SPAC reg. A proxy for a de-SPAC transaction would use the SPAC de-SPAC and so forth. This approach ensures that the specialized SPAC concepts like sponsor compensation, trust account structures, redemption contingent shares, warrant shares, things like that are all built into the taxonomy from the start. Next slide, please. So why is SPAC tagging so different from other US GAAP tagging? So a traditional company has shareholders, it has management, it has employees, and it has debt holders, things like that. A SPAC is far more complex of a structure. So you have public shareholders, founder shareholders with different types of redemption rights. You have sponsors, you have underwriters. There's potentially a trust account that is holding collateral. There are warrants that may or may not be exercised. There are potential PIPE investors waiting in the wings. And there's conversion mechanisms that are actually tied to the closing of SPAC deal. The SEC recognizes that there's different, they're trying to describe a very different structure using standard financial reporting concepts out of the US GAAP. So they created this regulation SK subpart 1600 rather, for an entirely new disclosure regime with specialized tables and concepts. So when we tag a SPAC filing, we're not just tagging numbers, we're tagging specific SPAC-centric concepts, and those concepts really capture the economics behind this offering and this deal that's being described in a particular SPAC. The SPAC taxonomy gives us those tools to do that precisely and actually tell that message correctly. Next slide, please. So as Angela mentioned, there's multiple parts to the regulation SK subpart 1600. It's a comprehensive framework. It's organized by item number, and just like the rest of regulation SK, each item addresses different SPAC topics. So looking at 1602, that covers initial offerings, the prospectus, and related tables. 1603 tackles the sponsor conflicts of interest, a topic that kind of dominates the SPAC regulatory scrutiny. 1604 is the de-SPAC analog to 1602. So they're somewhat equivalent, but it's the de-SPAC version. It covers the same narrative and table structure in the context of, but in the context of a business combination. 1605 through 1608 are supporting disclosures. So they talk about the background narrative, the board materials, opinions, and tender offer obligations. And then finally, 1609 handles the forward-looking projections that often accompany a de-SPAC transaction. So that's one of the few places where you actually have forward-looking projections rather than past financials in an SEC filing. This taxonomy supports each of these through different entry points that Nikki mentioned. When you're about to tag a SPAC filing, you first need to identify which items apply, and that helps tell you which part of the taxonomy you're going to start to use. All right, next slide, please. Thank you. So let's jump into the 1602. So 1602 and 1603 are quite large, so there's quite a few slides on these in particular. So we'll start with this one. So the offering for part is kind of the first comprehensive presentation in a SPAC filing. It helps a public investor understand three things. When the SPAC must accomplish the business combination or liquidate, whether they have the right to redeem their shares, and how the offering economics will evolve depending on how many shares they redeem. And in item 1602A, that kind of sets out the foundational disclosures. 1602B provides a shorter summary version of the prospectus summary section, so it's kind of like A, but a little bit shorter. And 1602C shows the full dilution picture across different redemption scenarios. So there's quite a bit of disclosure going on here for different ways the redemption scenarios could play out. So next slide, please. So 1602 A3 is the sponsor compensation table. So this one is probably one of the most important tables in the SPAC offering prospectus. From a conflicts perspective, it outlines exactly what the sponsor is getting in exchange for organizing and funding this SPAC. The table uses a two-dimensional matrix. On one axis, you're looking at who the sponsors are, their identities, usually founders or principals of the SPAC and any of their affiliates. On the other axis, you're looking at types of compensation, so founder shares, that might be issued at the IPO for minimal or no cash. There could be public units, shares plus warrants. There could be common shares, or there could just be warrants. So there's quite a few ways of compensation out there. Each cell of that matrix represents a distinct fact. So let's jump to the next slide if we could. I have an example here. So this one I pulled from the SEC, and I apologize how small it is, but it is an example of one of these sponsor compensation tables. So you can see exactly how that would be tagged. So first things first, in the top left corner is the SPAC concept, SPAC offering 4-part sponsor compensation table text block. That one is a mouthful. That one is tagging the entire table. And then you can look at really that dimensional information first. So the dimensional information is in the blue and in the green. So in the blue, these are one of the areas that Nikki said are one of the few spots that you can extend, if you will. You can't extend concepts, but you can actually identify affiliates or promoters or sponsors by using their name as a member. So in that first block, you'll see SPAC sponsor, affiliate, or promoter access. We have XYZ SPAC LLC. So they're the ones sponsoring this. And then you have 2 additional dimensions in green there. That's under the security access. So there's 2 different types of securities that they are potentially to receive. And then below that, we've got additional sponsor affiliates. So we've got a working capital member. And then the last one, the sponsor affiliate, is an additional person. That one is, oops, I have a typo there. I said it's working capital member. That's actually our fake underwriter here, the I'm a Vestor. So that one should be the I'm a Vestor member. So those members identify who the individuals or what the entities are that are sponsors, affiliates, or promoters. And then the securities class kind of break it down even further as to what their compensation will be. All right, next slide, please. Another large table in 1602 is this net tangible book value table. So this is one of the redemption scenarios that I mentioned earlier. So the net tangible book value table is kind of a quantitative display of the offering economic impact at different redemption levels. So public investors kind of want to understand, if I buy a share at the offering price for $10, what's my actual net tangible book value per share going to be immediately after post-offering? And if a lot of shares are redeemed, how does that affect my equity? So the table kind of structures this logic by showing number one, like there's no redemption for the best case scenario for the shareholders. Number 2, there's a 25% redemption, 50% redemption, 75% redemption, or a 100% or a maximum redemption. So that increases your dilution over each of those scenarios. So for each scenario, it calculates the adjusted net tangible book value and the difference from the offering price. So there's a lot there. Let's take a look at an example. If we could go to the next slide. This is out of the SPAC taxonomy guide. Just a couple of screen snips out of the guide there. So the table on the left kind of shows figure 12 shows an example of what this would look like within your filing. So it shows that offering price in the top left corner, and then each of those redemption amounts. And then on the table on the right, that shows you how you would represent this through XBRL. So the blue row, the second blue row on the top of that table is the SPAC offering 4-part for the table. So that's what you would tag your table with. And then those kind of peach colored rows are your axes, which show the different types of securities, what redemption level, and then that over allotment option. And then finally, the green show each of those individual concepts that you could apply to any of those rows within that table. So let's take a look at the next slide, and it has kind of one of these tables that I've pulled from an SEC filing off of the Edgar system to kind of show how someone would represent this in real life. So again, that top left corner shows that offering 4-part adjusted net table book value. That's your table text block. Then immediately below that in black, you see the registered offering price, 1 per share. That's the offering price per share for individual shares in this SPAC. So that's at $10. And then if you take a look at the columns, we've got this dimensionalized, or the tagger does rather, has this dimensionalized with the redemption level axis, and then redemption at 25%, 50%, 75, and 100 to represent the different redemption levels. And then along the rows, you have the over allotment option. And this one shows both with the allotment option exercised and not exercised, so that investors can see what would happen if that option were or were not exercised. And then finally, there's actually only 2 SPAC concepts within the table. There is the net tangible book value adjusted per share, which is what that redemption would be at the individual level, 50, 75, 100, what have you. And then you have in the purple the difference between the offering price and the adjusted. So that's basically the $10 minus the 707 or minus the 601 to give you the actual difference between the offering price and the actual, if there is that type of redemption. So that gives you an example of the net tangible book value, one of those types of tables within this type of filing. All right, next slide, please. So we're still on 1602, still in the very first portion of the regulation SK. 1602B6 is the prospectus summary compensation. So the prospectus summary compensation section is a lot shorter than the full 4-part section. The summary compensation disclosure may present sponsor compensation in a narrative format. So there's some key numbers throughout here that are highlighted, but there's typically not a strict matrix table like we saw on the last screen. When you tag this, you're marking up the same kind of underlying fact with numbers and descriptions, but less dimensionally rigid. The SPAC taxonomy supports this with, depending on your entry point, the role SK 1602A3 for the 4-part and the SK 1602B6 for the summary narrative. And both do need to be consistent across the board. So, and those are highlighted there at the bottom of that slide. Next slide, please. So now we get into the dilution table, 1602C. So the dilution table is probably the most mathematically complex table in the SPAC offering. It's essentially a 4-dimensional matrix. It breaks out how various economic factors, so sponsor compensation, redemptions, underwriting fees, PIPE investments, might affect the net tangible book value on a per share basis across different redemption scenarios. So there's a lot there. So you can kind of imagine a public investor asking, if I buy a share for $10, what's my actual equity value per share after I account for all the different dilution factors? So the dilution table answers this question across 9 different scenarios. So it starts with no redemption and it goes all the way through 100% redemption. And then it also shows you along the way with or without over allotment. So each source of the dilution is kind of a source or is shown as a separate row within the table. And you can see how the per share net tangible book value decreases as each source is kind of factored in. When you're tagging, you're essentially creating a fact for every combination of the security class, redemption level, dilution source, and over-allotment option, and its associated metrics. This is why the dilution table requires some pretty careful dimensioning, and any mismatch in the context will actually cause some validation failures. So if we go to the next slide, you can see, there we are. You can see a screen grab out of the SPAC taxonomy guide again, and this one is again just the XBRL relationships and how they would apply to this particular table. So we've got at the very top, second row, SPAC adjusted net tangible book value per share with sources of dilution table. So that's the text block we're going to use, or the table text block we're going to use for this table. And then in the peach again, you've got your 4 different axes. So those are the different essentially dimensions that we will be applying to this table. And then all of the green below that are the concepts that we would use. So if we could go to the next slide, we have a sample table here. And I didn't mark every dimension, and I didn't mark every redemption level or over allotment or anything like that, because it would be a little bit overwhelming. But what you can see here is let's start with the orange. So those are the redemption level axis, and the one I highlight is 25%. This is actually made up of 2 tables to show off all of this information. And each one has a no redemption all the way through a 100% redemption. So each one would have 5 different levels of dimension on just the redemption level. And then you have the securities axis, which breaks out within each dimension level, whether it's without overallotment or with overallotment. And you can see how those, if you look at the top table or the bottom table, are the same across the board with both of those tables. And then if we jump down to that second table, we have the numerator and denominator there. There's actually only 2 concepts being tagged there: the net tangible book value adjusted and the summary of shares used adjustments. Those are both in green there, but they're differentiated by all of those vertical dimensions for the securities class and the redemption levels, and then further differentiated by all of those purple dimensions that I've highlighted there. So those are all of your dilution sources. So each dilution source is broken out by what type of dilution source is there, further diluting that as you go down the list there. So that is a dilution table, and all of the different dimensions that you could apply to that one. Next slide, please. All right, so now we're on to 1603. So we've gotten past 1602, we're into 1603, and I promise it'll get faster from here. So 1603 is the SEC's way of ensuring that the SPAC investors understand the sponsor incentives and any potential conflicts that may arise. The sponsors put up sponsor capital to fund the IPO. It's secured by founder shares, often at a pretty good discount, and they often receive warrants. The sponsor obviously benefits if the business combination occurs, so the founder shares will appreciate. And it has little downside if it does not occur. The sponsor capital is at risk, but it's typically modest. There is an inherent conflict. The sponsor is incentivized to do a deal and complete the SPAC. So this is the reason for 1603. And when tagging item 1603, you are organizing kind of another complex set of disclosures. The sponsor affiliate compensation is similar to the table in 1602, but it may be presented differently, and it may include different or additional columns. The restrictions on sale text block describing the legal limits on when the sponsor can sell their shares. The conflicts of interest text is a narrative, and that sometimes can be quite lengthy, and it details all the ways that a sponsor might be conflicted. And then the fiduciary duties section is kind of a legal boilerplate explaining that whatever jurisdiction the SPAC was organized under, sponsors may or may not owe fiduciary duties to public shareholders. So each section is tagged with its own role, and the facts are dimensionally organized as appropriate. So let's jump to the next slide, please. I have a very small example here of some of the conflicts of interest that could be tagged as part of 1603. So there's two sections, one inside of the other. One is tagged with they're both tagged with the SPAC conflict of interest description text block, and it basically bullet points each of the potential conflicts of interest. And then they are further dimensionalized. The first one kind of represents that larger modal that you see on your screen. It represents the entire conflict of interest section, and that's just dimensionalized with the conflict of interest party axis, and they're using the SPAC officers and directors member. And then within that, they've broken that out a little bit further. They've got the conflict of interest party axis, but our sponsor and members of management member. So two different types of dimensions there on that narrative filing or a narrative disclosure. All right, next slide, please. Okay, jumping into the 1604 de-SPAC transactions. So item 1604 is the de-SPAC equivalent to 1602. So I won't go into a crazy amount of detail since we did go into 1602 pretty deeply. When a SPAC executes a business combination with a target company, the economic picture does change quite dramatically. The target assets, liabilities, business model, they're all folded into this deal, into this SPAC. The deal consideration could include cash, stock, debt, likely a mix. So it definitely affects the capital structure. Redemption rates matter a lot more because they directly impact the amount of capital available to actually fund the deal. The net tangible book value table now shows a per share book value in a post-merger entity, so after it's been merged. The sponsor compensation may change, so there could be new sponsors or targets, may even take seats on the board. And then the dilution table includes the target dilution sources, which could be target shareholder conversion, could be deal-related debt, could be earnout obligations. So item 1604 subsections kind of mirror 1602. So A, which I have there on the slide there, is the four-part with the detail tables. B on the slide is the prospectus summary with shortened narratives, similar to 1602. C is the dilution table, similar to 1602. So in tagging item 1602, you use different rules. You use the SK 1604 instead of the 1602. But the dimensional logic and the facts are pretty darn similar. The main difference is semantic. The concepts account for the fact that it's de-SPAC rather than SPAC. Next slide, please. All right, the 1605 background and terms. So 1605 is the narrative backbone of the de-SPAC disclosure. While 1604 and 1609 focus on numbers and tables, 1605 tells the story. Who is the target? What is the target? How does this deal actually work? What are the terms? How does this affect different shareholder groups? So when you tag 1605, you're primarily dealing with text blocks. Now, I do need to point out that 1605C, there on your slide, the effects section, it is slightly different. It may include some structured facts, share counts and percentage, and have some dimensional context. But otherwise, you're dealing primarily with narrative on 1605. All right, next slide, please. All right, 1606 and through 1608 are kind of the regulatory proof that the board actually um, acted responsibly in approving a de-SPAC transaction. So regulators and investors want to know, did the board actually consider whether the deal was fair? What advisors did the company hire to review that deal? What did the advisors actually recommend? What are the legal obligations that the SPAC may have to shareholders regarding redemption voting? So all of that's kind of covered between these three items. Item 1606 captures board determination. It's often a detailed narrative explaining the board reasoning, the conflicts that it evaluated, and its final conclusion. 1607 lists all the advisors and their opinions. So this is kind of the section for transparency. 1608 covers the tender offer mechanics. So those are required if there is a concurrent tender offer. When you tag these items, you're primarily working with text blocks, but you may have some structured facts and advisor names that you might need to additionally tag. And then lastly, we get into the 1609. So item 1609 is unique because it includes those forward-looking projections that I talked about earlier. Unlike historical GAAP financials, projections are just the management's best guess about the future. So they can be inherently uncertain. The SPAC taxonomy recognizes this by providing specialized axes and type dimensions for projections. The de-SPAC projection axis is typed, meaning that instead of using explicit members in a definition link base, we plug in the actual XBRL concepts as members. For example, instead of defining a member called projection revenue, we use the standard revenue concept from the taxonomy and attach the de-SPAC projection axis to it. So it can be quite extended with the ability to use type members. When you're tagging an item 1609, you're creating a multi-dimensional fact where each projection metric is qualified by its scenario, year, and range, which are all pointed out there in the 1609B on my slide. So let's see if we could jump to the next slide. I couldn't come up with a great example on the Edgar system, so I do have a kind of faux mock-up here of a de-SPAC projection that one would tag. The main thing to really see here are the axes that you would use. You're going to want to use all of those axes to describe the actual de-SPAC rejections as they are being outlined within that. In next slide, please. Lastly, which should have probably come first, it's the DEI elements in the required context. You do have a cover page with a SPAC filing, and that would include the registrant name, document type, and amendment flag. The CIK would need to also be tagged, but it's typically a hidden concept. And then if there is an amendment true, you would need a description. And so that would be your fifth element. So those are your 4 to 5 required DEI facts that would go onto this filing. And that concludes my section. I think I will turn it back over to Angela to take it home.
I will. Thank you. That was great. That was great. Thank you. Okay, next slide, please. Okay, so I know that we are at the top of the hour. I apologize. So I'm not going to go through every single item in this review and checklist, but just as a precaution, I mean, some items that you want to take into consideration when you're planning for your SPAC transactions, definitely applying for your EDGAR codes. You want to make sure that you're doing that as early as possible. And we say that because with EDGAR Next and some of the mandates and deadlines that are happening, it is taking a minimum of 8 to 10 days to actually complete the Form ID process and get your codes. So you want to make sure that you're, submitting those applications, making sure you have your account administrators in place, and you're prepared to be able to submit your filings in a timely manner. Preparing for your XBRL tagging. I know that most are working very closely with your printers. They are going to assist you as much as possible going through this process. So some things that you definitely want to look out for, some things that were mentioned by Will and Nikki. Um, Making sure that you're completing the required DEI elements. Again, you have questions. I know your printers are going to assist you through this process. Using consistent custom members across tables. Using standard taxonomy member elements first, creating extensions only when necessary. Definitely your ARRAIL validations, checking that as early and often as possible, and then submitting your EGR test filings. So you want to make sure that, and making sure that you are using the correct submission type, be that an S1 or an F1. Submitting your test filings. Reviewing your test filing results, you want to make sure that you've used the right CIK, it's coming back with the correct company name and the correct form type. So definitely there are several items in this checklist that we're providing just as a guide. This will be posted, so it will be available to everyone. Next slide, please. And then we have a list of resources. So the final rules, the SEC site, there is a lot of information, what you need to know about SPACs, the SEC SPAC taxonomy guide, the Cornell Law School, so Legal Information Institute, the SPAC disclosure, a lot of good information in that article. And then your EGR filer manual. It's going to help you with some of the process elements, the technical elements going through and setting up your submissions, and then the SEC EGR full text search for SPAC filing. So you can actually log into the SEC site, search for SPAC filings, give you an idea of what the order of filings looks like. You can take a look and see how those filings are set up and actually use that as a guide. Okay. And with that, I know that we had one or two questions, and I think, Will, I'm not sure if you're able to quickly answer this question. Again, I know we're at the top of the hour. I think it's something that you may have addressed. If not, Michelle, I think that we'll be able to submit an answer or provide a response to this question after the webinar.
That's right. Yeah. I mean, we can probably take like one of the questions that came in, and if everybody wants to put their cameras back on and their audio, I could just cover this quickly. I know, as you said, we're at the top of the hour here, but so one of the first question is in item 1600, there's specific language as to where a disclosure item should be presented. Specifically in item 1604, direct reference to four-part and prospectus summary. In real-life tagging, how broadly do we need to look to use those specific concepts? For example, if a specific disclosure for which there is a DSPAC four-part concept is not in the four-part of the document, are we required to look through the other 700 pages of the document to try to use that concept? It's kind of a complicated question. Or are the DSPAC four-part concepts intended to apply only in the document four-part? I don't know if Will, if you have an answer to that, or Nikki, or if anybody has any insights into that. And if not, we can always go back and double check.
Yeah, I think it's probably best. Maybe Will and I just kind of talk through both of
Mhm.
these questions. These are really good questions. So we
They
want
are,
to,
they're
we
very
definitely
thorough
want to get
questions.
very thorough. So we really appreciate it. So let's just have the three of us, Angela, Will, let's just chat about these and then we'll provide the response back to you, Drew. Thank you so much for submitting.
Yeah, thank you. And we are making the slides available to everybody and they have a lot of links and a lot of detail in them. So I want to thank all of our speakers. You've done a tremendous job. This is a huge amount of information that's been shared and we appreciate our audience coming too. We'll be posting that as well as the replay a little bit later. I know that some people weren't able to join us today, but I'm sure they'll be coming back to watch the replay later and access the slides as well. So thank you all very much, and we'll see you at our next webinar.
Okay.
Thank you.
Thank you.
Thank you.
Thank you.